back to another episode of the Smart Money Show. As usual, I'm one of your hosts, Ali Suleiman, and as usual, of course, I'm joined by my co-host and co-founder, Naman Akhtar. How are you, bro?
I'm all good, enjoying the summer. It's been fairly decent today compared to others, but now I still drive here today as well. What about yourself? You're nearly done with your summer internship, aren't you?
Exactly, yeah. So obviously we've done some pre-recording, so I've been taking a break for the internship, but I'm in my final 2 weeks. I'm almost done, and then back to doing nothing in the summer. But I'm not looking forward to getting back to uni. I'm ready to get into the world of work. But I think we can talk a lot about that. But why don't you tell us where we are and who we're joined by today?
Well, I think to just give a bit more background then. So, of course, our podcast, we basically deliver insights into different careers. And in certain situations, our kind of mantra has been that, okay, there's career paths beyond investment banking. But with the Smart Money Show, we're not really the anti-investment banking show, are we? So for that very reason, the guest we've got on today, who's allowed us to come to this very nice meeting room out in Canary Wharf, is Jesse Hall, a driven investment banking associate at JP Morgan. He was born and raised in South London, where he completed his A-levels within further maths and English literature. Then beyond that, he attended University of Nottingham to study financial mathematics, which funny enough is the exact same union course that I go to. What a coincidence, isn't it? And then during his time at Nottingham, he participated as an analyst in the Equity and Fund Society, where he was on the pharmaceuticals and financial services team. So a good few experiences that we can talk about there. But then, of course, after university, Jesse joined KPMG. He came back to London and he joined KPMG on the audit team, and for a few years he worked with Audit, then corporate finance, then shadow leadership, which after that he joined JP Morgan on their financial institutions group coverage desk. And yeah, he's been there for 3 years, and there's just so much to talk about. We all know how, I guess, prestigious and a hot topic this investment banking career is. So we're very, very fortunate to have such a guest on this episode. And many thanks to Janak and Saad for, of course, giving us their time to behind the scenes to help out with this episode. But anyways, without further ado, Jesse, how are you?
I'm good. Thank you guys for making the time on a Sunday to make it fit in with the week.
Yeah, I mean, I think we have to thank you for your time. I mean, you're obviously extremely busy, which we're going to get into, and of course, to provide this beautiful venue. It has been a goal of mine and Naman's to actually film in Canary Wharf, and we haven't done so yet, which is a travesty. So thank you for allowing us to meet that objective.
No problem.
But you know what? I'm going to steal it. I'm going to kick off. That's all right. So, as usual, on our episodes, we love to start off with background, early influences to really add the frame to a picture that we're trying to paint in these Smart Money Show episodes. So, I'm going to kick off, Jesse, with the first question. Very broad, so take it however you want. But what was growing up in Southwest London like, and did it influence your career ambitions at all?
Growing up in South West London was nice, I think. Grew up in, first of all, really from secondary school, went to an all-boys school. Mm-hmm. So I don't know if you guys went to an all-boys school, you know what that's like. Can be a lot of fun, can be a lot of play around. Yeah. But at the same time, I was always very interested in maths, and also was an avid reader. So which is why, as you mentioned with my A-levels, kind of followed the further maths path, also kept English literature on board. And really enjoyed numbers and working with numbers. Probably I was given maths books by my nan as birthday presents, which kind of subliminally embedded that as something that was meant to be enjoyable. But then, I mean, going through school wasn't really what you would say typically someone who was like focused on spending every hour studying. I think I managed to enjoy myself, but also take study seriously. Was reasonably good at maths, so I could apply enough effort, but not have to kind of spend every evening siloed away working on it. And at that point, I think it's important to frame that I didn't know that I was going to be interested in financials. I think a lot of people think that when people go into these sort of careers, they've grown up knowing that that's kind of what they want to do. I think it's not always clear, and you can constantly be, I think you guys were talking before we got here, as you get experience, sometimes your view of what you want to be doing next or what you want to do in the end can evolve. And so it was an evolution to get to where I am today, and that involved probably, quite honestly, doing a lot of work experience and things completely unrelated to financials to understand where I ended up wanting to be.
Wow, great. What a nice way to kick off the episode. And yeah, especially as you said, it's through experiences you can actually really learn, okay, what's for you, and then more of like, okay, what skills do you have that kind of you can probably apply for your future career. But anyways, now, of course, after your A-levels, you went to Nottingham to study financial maths, which, of course, I think we need to get sponsored. This episode needs to be sponsored by the uni, since we're giving them a lot of clout. But so how's that? Why did you choose financial maths? Because, of course, you've got that split of finance as well. And how was it?
So to kind of set the scene a little bit to what I was talking to before, I'd always been interested in making money, business, and how that side of things worked.
Mm-hmm.
And so by the time I came to the point of choosing what I wanted to do at university, I had this backing of things I'd enjoyed, things I'd enjoyed less. And to give you an example, I started wanting to do stuff that was related to business before I was legally allowed to be employed, before I was old enough.
Mm-hmm.
And that involved going to car boot sales, finding things that I thought were undervalued, and then finding the best place to take them. Example, sign Chelsea memorabilia.
Wow.
Find that at a car boot sale, pay £2, go to a pub during a Chelsea game with parents, obviously, and find the right crowd to sell it to at the best value.
Yeah.
To buying and selling shoes before that became too saturated, to working at a car sales place, trying to get as much experience as possible in different types of business. And I think I didn't always get the experiences that I thought I wanted at the time, but I always took the experiences that I could, and saw value in them eventually.
Yeah.
And that's not to say spread yourself thin and use your time in ways that is invaluable, but don't always discredit the experience you're going to have. Because it even involved working in presentation services at Chessington World of Adventures,
Wow.
which is very not like on the glamorous side of things. But if you want to understand how a business works, and if you're in financials or working any sort of finance role, to understand the numbers, there's context behind all of them. To understand how a business functions, you kind of have to see it to kind of bring the intangibility of numbers being more tangible.
Yeah.
Even then, like you guys, did a bit of media work. I worked doing photography predominantly, but then thereafter doing a bit of video work. So worked with, as I mentioned to you, kind of a well-known personal trainer. I worked on a comedy series with Smokey Barbers, who's kind of a well-known barber now. Did a bit of filming with a guy who was working as a crane mechanic, filming Samsung adverts. Did work on, I was a Wimbledon ball boy. Kind of, you see all these different experiences, and most of them you'll see do not relate to financials or FIG. But kind of the point was, as I got through my studies, I'd built up all this experience, understood how businesses worked, and I was really keen on maths. But I had a family friend who had taken pure maths and kind of said to me, if you know you want to go into a financials based job in the end, maths is great, but you can kind of give yourself a bit of a head start on some of the things that maths won't teach you that you'll be expected to know in the job through that degree. And so when I applied for university, I think 3 of the courses were pure maths, because at the time not all the universities were offering this joint honours. And then Nottingham and one other university were offering the joint honours in financial mathematics. And I liked that it had a bit of accounting, a bit of econ. Obviously my A-levels didn't include econ. And so I got my offers. That was the one that I wanted, and I went for that. I liked the sound of being out of London. I'd grown up in London for the whole of my childhood and ended up in Nottingham.
Wow, what an answer. That was extremely multifaceted with so much value. I'm going to pinpoint on a few things. There's students, including us at some point in time, where we were like, oh, that experience isn't what we want it to be. So if you want to get into asset management, or it's not an asset management experience, so we're not going to do it. And I was actually saying to our behind the scenes team before that there's value in every experience, as you just said. Not an experience might be bad at the time and not what you wanted, but just because you don't see value in it now, as you said, you will kind of reap dividends from it in the future. I think that's a really key point that I wanted to just hone in on. And then not just that, but putting yourself out there, try everything. You don't know what's going to kind of take your fancy, and I imagine all those sort of kind of entrepreneurial ventures, the skills and soft skills that you developed during them must have helped in your role now, because you, at the end of the day, it's a people business, speaking to so many people, right?
Definitely. I think it was, like I said, it was a mixture of working with businesses and seeing how they worked, and then opportunistically seeing what else could I be doing. And then you learn different skills and you meet different people along the way in both of those journeys.
Yeah, no, for sure. So, kind of staying with the university thing a little bit, it's a kind of double-barrel question. So, what kind of student were you at university? Were you always career-driven, or did that come a bit later? And when did that come about? And then also, when did that idea of working in finance become a bit more realised for yourself?
I was very organised as a student.
Yeah.
I'd say, we were talking earlier about kind of start of term, full attendance to lectures,
Yeah.
end of term, ghost town, tumbleweed. And
Sounds like
so,
you.
so I probably attended 90%, 95% of lectures.
Wow.
And I just kind of made sure that was a rhythm I stayed in as a discipline.
Yeah.
Not that I think you could do, it was Moodle at the time, I don't know if it's changed, but the online service that they had, you could always recap. I always wanted to be there because I felt like if I'm there in person, I would hold myself a lot more to account at paying attention. Did all the work on time. Maths is kind of somewhat a lazy degree in the sense that everything was bunched towards exam season. So in the year you could get away with, as long as you did the work, you could get away with just making sure you understood something at a point in time and knowing that when you go back to it, you'll really ingest it when time for the exams. And so very organised, but also made sure I enjoyed myself, made sure I networked with people. There's still people, I'm going to a wedding next year now by the sounds of it with one of my university housemates. Not everyone in my house does finance that I was living with in third year or second year. People are doing all different things, and that's, I guess, the nice thing about university, right? You meet people that go on to do all sorts of different things. But I think I was very focused on, when it came to the job hunt, making sure I was aware of what was going on. I came from a household when neither parent worked in finance, neither parent had a university degree. I was the oldest child, and so it was very much working out for myself. And quite nice in the sense because then you aren't directed into anything that has any bias from anyone else or that you don't necessarily want to do, but also you then need to do the groundwork. And so I remember in my first year I wasn't too savvy with the timelines, and by the time that the campus visits happened by the companies, they'd be saying apply, but half the applications were gone, it was closed. And so I didn't really beat myself up about first year because it was always a short spring week, I think. Summer internships, the context of why I went into KPMG, which is why I interned in a Big Four during the second year, was I did some work experience with a shopping centre company, again speaking to the fact that nothing to do with financials. And whilst I was working there, I found it very interesting the day I spent with the CFO of that company. And you could argue about where we are in time, what it was back then in terms of career and what it is now, that he spoke to the value of being a chartered accountant as kind of a floor in your career and the universal kind of skills you pick up that allow you to move around and do different things, and it keeps you kind of broad rather than being too specialised. So I took that on board. He had, I think, been at one of the Big Four many years before and then stayed on at the shopping centre until he'd made his way up. And I then interned with Deloitte in the second year of university in audit. And that was focused on, I was working on a recruitment firm and a law firm, auditing them. At that point, I had done, as you mentioned, the equity fund role for first year in pharmaceuticals and then by third year financials. And as I came into my third year and started thinking about exiting into a graduate job, I was more interested in financials because of all the different businesses I experienced over the years of working. I liked the kind of technical skills that I'd picked up in maths being applied, and that goes with all businesses, you'll see that being used, but it was especially kind of testing yourself with financials. And so when it came to making a decision, it was really about looking at the clients that the potential firms had, and you can publicly see that because you can pull up the annual report and see who signed off as auditor, and assuming that doesn't change year on year, then you kind of know what you're potentially getting yourself into. So I ended up going with KPMG. I kind of spoke to all those guys, interviewed, and then it was those and one other that had a really good roster of financials clients, I felt. And as soon as I got in the door, I kind of stuck my hand up for their biggest banking client, and unsurprisingly they were happy to have me because I don't think many people fancied that. It came with typically longer hours than you would get in a normal audit role. And that kind of was where I went to from the back end of university. But university, I'll just say, organised, not necessarily 100% on what I wanted to do, but equity funds was a good kind of lens into what sort of things you could do, networking with people, seeing what they were planning to do. But my foundation in terms of moving for the first role was kind of set through seeing how businesses worked and how this work experience had kind of influenced me, that starting your career as a chartered accountant would give you a good underpin for whatever you wanted to do thereafter.
Sure.
Yeah, and it's just that the idea of just being proactive, like even during university and of course beyond, as you did as soon as you go into KPMG. So that's I think what can really take like people to the next level, and that's not just something that students should be focused on. That's something that professionals should be doing all the time as well, because I think the benefits are lasting, aren't they? So okay, so now we're going to talk a bit more about like your role during KPMG. Of course, you've already given us a bit of background. So did you always see like audit as the stepping stone towards banking? I mean, I know you mentioned that it was a great floor, but then specifically maybe investment banking, how did you see that transition beforehand?
No, it wasn't my plan initially. I was open to not having a direct plan. It was kind of more, this is where I will start. I don't think it's going to shut off too many doors. It might make certain doors more challenging to go through after, but I don't think it kind of closes too many. So stepping in first year, that wasn't kind of my next move that I had planned in the bank. As I worked through audit and as I worked through auditing banks, I found audit very helpful in understanding how you can be in a big company and how the financials can be put together, and someone who clearly doesn't have the bandwidth to review every one of those numbers and how they got put together can be comfortable with those numbers at the end of the day and how to then present them to the shareholders of the public markets. That was, as I said, a very helpful underpin, but having come from a financial mathematics background, I didn't feel like I was getting to apply everything I wanted to on a kind of a technical level. So I got qualified, and whilst I was studying, the kind of the program that they had at KPMG was you could either come in, which is typical of Big Four, do your 15 Chartered Accountant exams alongside working, and after 3 years you get signed off with your professional experience and you become a Chartered Accountant, assuming you pass all those exams. KPMG had two roads. You could either do that traditional route, or they had an intensive program where you could, it was kind of like university after university, you come and you do exams for 9 months and go to college in London, and you do 14 of the 15 exams in the first 9 months, and then you just go straight to work. And for me, it felt like a nice transition, because you would meet some of your cohort in a kind of still an education setting, but also you were coming from a maths background where I'd done a bit of accounting. It meant I got a lot of the background knowledge I needed to do the job. It felt a bit strange to me to be doing the job while still studying on the go and trying to learn what I needed to be doing. And so that was a really good route. I remember doing that for 9 months and then picking up the CFA, which had a lot of overlap on the accounting side, but then a bit more on the technical side, and focused on different asset classes that weren't really touched upon in either my degree, equity funds, or in the Chartered Accountant exams. And so I was kind of just diligent in getting the next qualification and being like, this should hopefully again unlock more roads that I can go down once I decide what I want to do after audit. And it helped with auditing banks because they're inherently complex beasts. So whilst I was in there, I was on the biggest audit client in KPMG, and that got a lot of spotlight from senior people, which was very helpful. Some people viewed it as, if you go into banks audit, you're going to get crushed for hours in a job that doesn't need to be so hour heavy. But at the same time, when it's such a big client, you get exposure to very senior people, which is obviously always helpful to network in the company. And if you want mobility, you've got the ability to reach out to those people and try and leverage that in order to make your moves or to kind of credentialise yourself. So that was always very helpful. I picked up another audit of central bank, which you maybe can guess which central bank, and that was very interesting to kind of plug the whole piece together of banking. You see a bank, investment bank, retail bank, commercial bank, and then a central bank. You can kind of work out how the system functions. So audit days were all banks, and then I was kind of more interested at that point as I got to the latter years in the strategic side of business and considered restructuring. KPMG had a very strong restructuring business at the time. There was uncertainty about what was going to go on with that, and eventually they ended up selling it on. And I was interested in corporate finance or the M&A team. And so doing my due diligence, every team, you can't label a culture, a kind of a strength or anything on a broad company in one go. You can just say that about any company, especially when there's different sector teams. And so you have to really do your work to understand what is this team going to be like, and what is my opportunity going to be like in this team, and who am I going to be working with, and kind of what do I expect to get from this. And it was difficult because at the time it was COVID, and so I'd gone through a career that started with no working from home to forced working from home to being interested in investment banking, but taking the choice to stay within KPMG and look at either restructuring or M&A as the next step whilst I awaited hopefully lockdown lifting, and then making a move when I could actually be in person with a new company and a new team and meet them how I felt would be a bit of a better time to transition. So I made the move into FIG, KPMG, initially remotely and then in person with kind of a hybrid working setup. And as you can imagine, Big Four versus a bank, we're not financing and doing bridge loans at Big Four, and so the nature of the deals you pick up, especially in FIG, is not always, but typically or more skewed towards business service type financials work, and spent more of my time looking at insurance distribution, so the kind of distribution channel upwards to the insurer, and somewhat on like the actual insurance side and other things like fund and trust administration, but predominantly insurance. And so that kind of broadened my remit from just banks into a bit more of the financials ecosystem. And after lockdown had come away, that's when I started looking outwardly and thinking about where I would want to go, looking at investment banking more seriously. Was definitely still interested in financials, and I feel like you don't always have to stay in the same sector if you're in a sector-based role, but I enjoyed my sector. I felt like it was somewhat defensive in that it was quite technical. You can't just plug and play people from other sector teams into FIG, and I was interested in kind of expanding on that into more the capital intensive banks, insurers and those businesses away from the financial services that I've been working with. And so that's when I started my look outwardly beyond KPMG.
Yeah, again, I mean, it's such a brilliant answer, and there's something again I want to highlight. Forgive me, there's a lesson in each of your answers, but you didn't have a direct plan. And I think that's again something, as speaking for myself, but also for the community students that we work with and our audience, and also people with students we know, and ex-students as well, they all thought that they needed to have a plan. Right, I'm going to do this role, and then, so for example, if they were like you, Audit and KPMG, right, then I know what my next step is. I want to retire by this age, get married, and it's never going to happen like that. I mean, life has a flow to it. You can't plan it, otherwise you risk having a tunnel vision, and then you risk, not looking at doors that were open to you. And as you said, it did close off that many doors, instead it kept them open, which you wanted to do. So I think that's a really important lesson for our audience to kind of, it's a golden nugget, don't be scared if it's not going to plan now, basically.
Well, plans change as well, right? I think it's helpful to have a plan, but don't be rigid to the plan, because not everything's in your control. And also the world is always changing, and your plan should probably change with the world and with your experience. So if you wrote a plan down consciously and wrote it down and then reviewed it and then kept writing down what your plan is and saw how much it's changed, you'd accept that because it's kind of happened. But if you try to accept your plan changing before that time has come, it's harder to envision. But if you're open to it and you don't track things with a disappointment if they don't seem to go your way, and you kind of just take it as this is how it was meant to be for some reason, it's a lot easier to then continue, right? Because I think what you're saying is, if you're rigid to a plan, probably leads to potential disappointment, even though things aren't in your control, and that's not really going to help you move forward. It's kind of drag you down, right?
Exactly that. Develop adaptability, I think, is one of the most important skills you can have. I think it brings me on to the next question, which is, did you have any moments of doubt during this inevitable transition period? I mean, not only just the team changes at KPMG, but then also the firm change, which we're going to really get into transitioning to your current firm. But when there must have been, I'm assuming that you had any doubtful moments, or is this the right decision? Am I going about this the right way? So how did you handle that? Because I think moments of doubt are prevalent in various decisions of life, whether you want to yourself now or students like us. So what was that mindset change, and how did you handle that?
I think, when you go from a maths background, it's not like doing an arts degree where you can write something and you have no certainty about how it's going to be perceived. If you're confident in your answer, you can have certainty around something, right? You're going from a place of being used to certainty to uncertainty. I wouldn't say it was doubt, I'd say probably uncertainty, because you can't be sure. And so you have to just find, the way I would just spend a lot of time researching, speaking to people in the industry, out of the industry, getting perspectives, and then kind of collecting that and averaging it out, and then putting your own lens on it, and trying to reduce the level of uncertainty around your decision by accepting that there's always going to be some level of uncertainty, right, in what you're doing. I think I was fairly certain about investment banking. I had an understanding of what I would be getting into. The biggest uncertainty, I think, is the team and the firm, because it's very hard from the outside in to get a true picture of anything without being there. I had the good fortune of knowing someone who was in the team that I was interested in, and so I could get a gauge on the calibre of the team, the culture of the team, and that was very helpful.
Yeah.
But yeah, I mean, even for myself, I was like initially at the start of my first year at uni, I was looking at global markets because, you know, for STEM students, it's kind of pushed on. Like, you know, if you look for finance, you probably fit well in somewhere on the trading floor. But then I did my spring, and then after that, I was like, okay, maybe, you know, M&A or something on that end is more appealing, because at the end of the day, it's, you know, if you just put, I guess, trust in like what you're good at, and I know that's a very, very bland statement, but it's if you put trust in like your key competencies and qualities, and then you push forward with that, then like your career path kind of like paves itself out in a way. I mean, of course you have to be proactive, but like there is a lot to it on that end as well. I know I've just rambled on for like 30 seconds, but anyways, so like now we've talked about how like the reasons why you've wanted to kind of move beyond KPMG and like why you were aiming for investment banking. But could you just talk about what the actual like lateral movement was like, and recruiting as a professional to another professional role in not exactly the same, I guess, job? So how does that sound like? How did that sound like for you?
I think when you're moving, it depends. The way I looked at it was I always wanted to keep the learning curve steep. Whenever I was in a role where I felt like I was kind of not plateauing, but the amount of new learning I was getting at every year or every period was slowing down, that's when I kind of got a bit itchy and wanted to try something else. And when doing the move, you have to, I mean, I was fortunate that it was still semi-hybrid, so in terms of interviewing, you could kind of manage that around your day without being in an office and disappearing every now and then, because you can imagine there's quite a few rounds involved. And I'd say I spoke to multiple banks at the same time, which was helpful. One, I spoke to a bank to start with and wasn't necessarily interested in going there. It wasn't in FIG, but it was just good preparation, kind of just as a, not a throwaway, but as a get yourself ready, because when you're doing an interview for the actual team or firm that you want to go into, you want to be polished, and you can't prepare for anything like doing the real thing. So do the real thing. I did it elsewhere, and then kind of was like, I don't really mind the outcome. I'd take a consideration of it if it came, but more so just to be ready. And then applied for 2 of the exact same roles at different places and had them going in parallel. And it was also helpful just to, if you work in M&A, there's competitive tension in deals. To create competitive tension in the application side from your perspective. If someone applies and then someone else applies and you've got one role and one of them is being pursued by another bank, it kind of already makes you feel like that's someone that maybe I need to take some notice on, in the sense that we might lose them to a competitor if we don't act quickly or if we don't consider them properly. And that was helpful for me on that process. It was painful. I think I did something like 16 interviews in 2 weeks alongside working, but very also helpful to gauge side by side 2 different teams, 2 different sets of people, 2 different perspectives on what my work would look like and how the next 2 years would play out. And I think the interview part was hard, but there's lots of resources online. I mean, the difficulty I think is, and I get emails all the time on LinkedIn, finding someone who works in the job that can find the time, if you don't know someone, to explain and talk about your career, to get the understanding to, 1, understand if it's of interest to you, but 2, get the insights you feel like you need in order to be able to articulate yourself in an interview process. And so speaking to people where I could, and a lot of people just don't reply on LinkedIn, to get the kind of insights to be able to give a good interview, reading the resources. I think there was something like 500 investment banking questions online. Like, not taking that as a joke and just preparing as if any one of them could come up. And then
it's not easy.
No,
it's not.
And then the last part of the role, making sure you didn't burn bridges, because it's very easy to turn the gas off when you know you're moving somewhere else. But at the same time, when that something else is slightly entering into the unknown, you don't really want to burn bridges anywhere. That would be advice I'd give to anyone. Even if people you don't feel like are kind of rinsing you a bit or taking things too far when you're on your way out, I'd say I kept a good rep with those that I worked with before I left, so that you're always keeping doors open.
it's brilliant advice, and I guess you talk about LinkedIn. Well, we thank you for replying to us on and to being open about, because someone is trying to get into a role like yours. At the end of the day, someone in our audience, multiple in our audience, or someone out there that will listen or hear about you trying to get into a role like yours. And so this is what we do on the podcast, because unfortunately, I think just to talk about student community, there is a sense of gatekeeping that's there. I know this, you don't, so I'm going to keep it like that. I've got this insight, you don't, so I'm going to keep it like that. And that kind of does spill over a little bit into the professional world, which is why we're trying to really kind of put a pin in that and break through it in a sense. But not to just ask the technical questions, because as you said, 400 IB questions is there, but we can get the real career insights, which is what you're giving us. So we thank you again for giving us some of your time for that. But I think final question on this section is, would you recommend the Big Four route as a viable alternative into breaking into investment banking roles?
I think if you know from the outset you want to go into investment banking, you could use it as a route, but I would recommend you just go directly for it. And then, for example, if you didn't get what you wanted, that's always an alternate route. And I think, as I said, it provides a very good foundation. And you don't have to go through audit to become a chartered accountant. You can go straight into corporate finance. You could do transaction services and work on M&A due diligence, and you're actually plugged in with the investment banking teams at that time. You're not doing the same work as them, but you're in the same kind of field, working on the same transactions and getting relevant exposure, because when you're in investment banking, you're working with the diligence providers, or at least co-advising alongside them on the same sort of transactions. So if you understand that work stream in terms of project management and working with the client, you've got a bit more breadth to the kind of different advisors and the work streams that are going on. But if you know at the point of university, I'd recommend you just go for it. I think the learning curve in investment banking is very steep, and I think you can equally do it from Big Four, but I don't think it's kind of a prerequisite. I mean, many people don't, right?
Yeah.
I think it's definitely challenging from looking at my peers that followed a similar route going into investment banking. I think it's not the ordinary.
Perfect. Well, then a bit more on your transition, like from, I guess, KPMG to JP. So now that, like, of course, you've transitioned, now you walk into JP Morgan the first time, and of course you've had your like deal experience within the KPMG's corporate finance team, but of course there is differences between IB culture and corporate finance culture in a way. So how was that culture shock for you, and like were there anything else you experienced during that specific transition then?
Well, the first shock was that I had more exams to do after I spent years doing exams at KPMG. There was financials, like FCA reg exams that you had to get through, so they didn't let me do anything until that first one was done. So I had about a week or something that I was revising, sat at the desk feeling not the most useful, got that out of the way, and then from there I think it was really, there's a lot more independence. You kind of left to go away and spend the time and do things. Not saying that it's not the case at KPMG, but I think there it was just, you kind of get thrown in, get on with it. I picked up life insurance, which was a sector I'd never covered before. Continued with banks. You pick up, I mean, they keep you broad, asset management, wealth management, all the sort of subsectors that are really kind of key. And so it was kind of just pushing yourself to get up to speed as quickly as possible in all those areas, and understanding that I was always fine with it. I had an ex-Goldman's director at KPMG, so I kind of seen a bit of what IB was like and how particular he was in certain things, which was kind of very helpful prep. But then people were very particular down to what does a footnote say on a page. Like everything's got to be spotless. If you imagine yourself going to a client and presenting something, an idea or something they've asked to see, then anything that is even a slight error or an inconsistency can cast doubt, which then can cost you potentially transacting on something, or in worst case obviously a relationship. But I mean, just, you don't want to instill any doubt in any client. You want everything to seem perfect and to be perfect, right? Not just to seem it. And so I picked up on kind of the imperative of things being spot on, but at the same time you're working long hours, you're juggling multiple things, and so it's, and I think one of the managing directors said this to me, it's kind of everyone is aiming for perfection, and you won't always get perfection, but as long as you're aiming for it and consistently getting better, there's layers of review in investment banking and kind of the next person's aim for perfection, and they add a lens that you didn't think about, and it kind of goes from there. So it was getting used to and I liked it because I'm competitive, the kind of the push for being 100% perfect as much as we could be, and also just the directness, just being direct. It's kind of not like thank you very much. I mean, not saying that people are impolite and people do say thank you, but everyone's under time pressure and the focus is really on delivery. So it's just focused on being objective, and you learn a lot better in an environment, I feel, where people can give you feedback quickly rather than waiting 6 months, having a performance review and finding out what people think or what they would have preferred you did, right? And it's an environment where people are a lot more open and direct in real time, and so you learn a lot quicker if you're taking that feedback on board.
Yeah, that's a super transparent answer, and I think again you're doing our job for us. It leads in great to the next question as well. So what does and we've heard it all the time, not every day is the same, we know that, but what does your day-to-day typically look like as an associate on the FIG team, and what's kind of your favourite parts about that, and how does that feed into the culture at JP Morgan as well? So
we have clients that are sort of retained clients that we are corporate broker for, and then we obviously speak to clients across the market.
Yeah.
And so day to day, month to month, is dealing with the inflow of queries or things that the clients want to understand that could pertain to how they're doing in the market, what's going on with their shareholders, what do we think about this idea, can we present a view on it, all the way to someone who's not a client but we've got an idea for them and we want to go and pitch it and present it to them. And so your managing director tells you that they've got meetings coming up, and you sit with the team and work out from their outline kind of what you want to do to approach that meeting. What do we want to show, what analysis do we want to run, and then manage it like that. And then another thing comes in and it's got a shorter deadline. So okay, who's got capacity here, how are we going to manage this, what work can we leverage, what work has been done that's similar, what do we need to think about that's new, what's changed. And I think it's a kind of a project management kind of plate spinning act with learning new topics, learning about new clients, kind of bringing together what you know already and applying a lens of, if this is what we know, add this new piece of information, how does that change things? And trying to keep a pulse on what's going on. So we're not in markets, right? I'm in a coverage team, but a pulse of what's going on in the markets so that you can kind of feed that into the work you're doing, because it affects all of our clients. As the markets change, the ability for a client to pay if they're paying in shares changes, or their hesitance towards wanting to do a transaction where they're buying something for a price based on shares changes. So it's, as I said, a juggling act, but kind of with a bit of project management, bit of kind of trying to build your sector skills up or subsector skills up, and managing people as well. Because people are all under pressure in this job, and trying to manage people and balance being social, caring about what people's kind of life is like outside of banking, but also motivating them to push when we need to push, motivating them when maybe they've got things they could work on improving, but they've got to deliver on that, and so making sure that they understand what they need to do and that they're willing to push and focus on that going forward is probably all the moving parts that you need to be thinking about at any one time.
Yeah, and I think it links back to how you mentioned that investment banking is like a very steep learning curve. So whilst you're doing all these things, it kind of basically forces you to learn on the go. So that makes complete sense. But now talking about FIG specifically, now from my understanding, it's, I guess, the busiest sector team like across the industry, to be honest. So then, how would you describe like working within FIG compared to maybe another sector team in investment banking?
If you speak to someone from another sector team, they can give their view about another sector. I think you're right in that there is normally something consistently going on with FIG, because you think about it as kind of just the bedrock to an economy in some way, be it a bank, an insurer, an asset manager, a wealth manager. And so that I wouldn't say FIG as a whole is always busy, but there's always something that's busy, and so we have quite steady flow through the cycle. I think the other teams, I mean, the businesses in FIG don't really, they're digitalized now, but those businesses existed many years ago. Maybe some of the kind of nascent asset classes, cryptocurrency or other things, you might see exchanges coming through, but banks as banks and insurers as insurers Sure, they're evolving in the way that they do things, but the businesses are still there. Maybe you might think that other sectors are subject to more change. So you could argue that the learning curve there is slightly different. You're kind of more focused on how is that sector evolving. Of course our sector evolves, but I think there's a high watermark for the kind of the foundational knowledge you need to get your teeth into banks, insurers and some of these other businesses. And then when you can do that, I think the work I at least find coming from a maths background very stimulating, because there's so much that goes on with these businesses, and there's so many lenses, from a IFRS accounting lens to a regulatory lens to a actuarial lens if you're looking at insurers, that you need to kind of be able to navigate in order to really understand what's going on.
So the scope is really broad in the role, and is that something that excites you about it? I mean, at times I can imagine that you've got to know so much, but just the ability to have to empathise with your client. I mean, you said keeping up with the market. You don't do that for the same reason maybe like global markets would, but you do it for a reason, to empathise with your client, to understand what they're going to do and why they're going to do it. So is that something that excites you, just the broad scope of your role?
Yeah, I mean, it can also be very annoying. You can prepare a load of materials and they can all be ready, and then the market can move, like the tariffs situation with Trump, and then maybe your conclusion changes overnight. Maybe the timing of what you're trying to say doesn't quite fit the bill anymore, and you've done a ton of work, but at least you wake up and you have to understand what's going on in the world to be able to work out what that means for you. And I think if you enjoy ingesting a lot of information and trying to keep up with what's going on, it's a role that kind of forces that upon you. In order to be good at it, the role, you have to kind of try and keep on top of things. And not only that, you have to kind of work out what is important, because there's so much information coming out all the time. You have to really navigate what is important. And you're working with a bunch of very capable people, so by osmosis, you pick up on things maybe you didn't pick up on. Everyone's super competitive, everyone's high IQ, everyone's working very hard, and everyone's got outside interests. And so as a team, you pick up on a lot of things between you that maybe you as an individual hadn't had the capacity or the insight or maybe the outlet of news or whatever to have picked up, but then you get put onto it by someone else. And so I think that the information flow in the role is for anyone that's very curious about macro, somewhat politics, markets, and then financials if you're in the FIG team, is strong.
And I want to like the investment banking 101 section, so I think it will be like a great insight coming from you. So a question to kick it off. So like, if you were explaining it to a university student who knows nothing about investment banking, how would you describe it? And maybe more specifically into the FIG team, I know you have already, but go for it.
From my side of the bank, so kind of excluding the market side,
yes.
I would say, I think about it like a grid.
Okay.
And you've got product teams, your debt capital markets, your equity capital markets. Within debt, you've got investment grade and high yield or leverage finance, and M&A. Those product teams will work across all sectors and focus on their product, and then the coverage teams kind of intersect across each of those and will cover all those products alongside the product teams where required, but cover their sector. And so, for example, FIG, you don't see as many IPOs in the UK these days, but if you see an IPO and it was in FIG, then the FIG team would be working on potentially that IPO alongside the equity capital markets team. But the equity capital markets team might also concurrently be working on a consumer IPO or a sale of shares or a block sale of shares for an industrials client. So the FIG team fits in the sense that we probably spend a lot of our time doing M&A, given the nature of like capital markets on the equity side. The debt side and FIG, I mean the FIG debt teams probably are busier in the sense that it's kind of flow business. For a FIG business to kind of renew its debt capital is just kind of typical. It's not the same as other sectors, and so they probably get a lot from banks, insurers, and our work really focuses on M&A, a bit of ECM, and maybe a bit of leverage finance, but probably more on the side of the financial services business rather than the financial like capital intensive businesses. And in the M&A side, really all banks, not all banks, but kind of you prefer to be on the sell side, because on a probability basis, if you're selling a company, you're more likely, if the process is going to happen, you're going to sell it, right? Whereas if you're on the buy side, even like conditioning on that the company will get sold, you are one of X buyers, and therefore your probability simply is like 1 over X. Right? Unless you've got a buyer, but you obviously try and back the buyer that you think has the greatest likelihood of being able to transact, but you're paid on success, and so you can throw your eggs in that basket and then end up working very hard and not coming through the result you expected. And so a lot of the time investment banks prefer to position themselves on the sell side, and so a lot of the work that we'd like to be doing or do is selling companies. You do end up on the buy side. If you're not on the sell side and you still want to be involved in the deal, it's obviously very competitive. There's leaderboard rankings across all the banks, and so if a very big deal happens, you want to be on one side of it, right? Otherwise the other names are going to be up there in the leaderboards without you. And so that, I'd say M&A is what we spend a lot of time on, and the M&A team comes into that where it involves public companies, because there's all sorts of takeover code rules. There's things that you need to do as a listed company whilst going through that process that they are more focused and kind of trained in doing.
Yeah. That's such a holistic answer. It's brilliant. And we were going to ask, like, what's the coverage team, what's the product team, what's the difference? That grid, I'm going to nick for an interview if they ask me, what do you think IB is? Well, this is what I think that is amazing. And actually, a lot of people think IB is just so, like what they see in the movies, right? So glamorized, romanticized. They don't know everything you just spoke about, right? And so, that was super helpful. But in practical terms and in your own words, what is a banker actually doing when they advise clients, for example?
So that's the thing as well, right? With coverage, a lot of time the relationship with the client is held by the coverage team. Yeah. So if something's going on with the equity capital market team, a lot of times, you're not going to say that they can't speak to them, but we lead the relationship. Yeah. And so when you say, like, what does the dialogue or the relationship look with a client? From a coverage perspective, you are holding that relationship, and that goes for if they have a need across any sort of banking product, you would try and help facilitate that for them. You would help connect them with the right people within your respective bank, and you would also just try and find ways that you can be useful to them to build the relationship, so that in the case, at least for the coverage perspective, they need to raise capital through equity or debt capital markets, or they need to do a transaction, or they're thinking about what they could do with their spare capital or their excess capital, that you can be part of the idea generation there, and then when they decide what they want to do, you are helping them facilitate that, or even presenting them their options and being the person that guides them through that process thereafter. So it can be very holistic, and then once you have that established relationship with a client, it enables you as a trusted advisor to probably be the person they turn to when they've got something big, right? If you put yourself in the shoes of the client, depending on what client they were. When I was at KPMG, a lot of the businesses were, still reasonably sized. Say it was a £40 million business. It was founder run with a team, and they're probably only going to sell their business once, right? Yeah. They might sell part of it, but they're going to sell their business. That's going to be the biggest thing they do. So you being there and being their trusted advisor is like helping them like sell their baby. They like, it's one of the most important parts that they're going to have of their career, and getting that right and being the person who's already positioned near them and that they trust means that you are part of that process. When you're talking about larger companies and sort of the businesses that we work with the bulge bracket IBs, if you're a CEO and you make a poor strategic decision, that will follow you probably for the rest of your career potentially, or change the trajectory. If you make a good one, potentially does the opposite thing, right? And these guys are constantly probably having meetings with different investment banks, pitching them different ideas, think about what they could do internally. And so being someone that can help them with everything they need means that when they come to a strategic decision around doing something that could be like M&A, you can hope to be in the position to be there helping them along that journey.
Yeah, and I think that really shows how, of course, everyone's heard of how there's a lot of valuation work in like M&A investment banking, but then the bigger picture on like and how strategic it is, it's you've given great colour to it. But as I mentioned, so now earlier on you said that the sector teams work in tandem with the product team. So say, for example, an M&A transaction, you'd work with the M&A product team. Now, of course, does that mean that the valuation work for yourself? Does that get taken off your shoulders, or how does that really work for for example, a sell side deal? How would that work?
So generally, as a rule, the product teams are generalists. Like DCM might be more skewed towards financials, but the coverage team will be the ones at least leading on the valuation, because they're the team that understands the sector best. And if it was an IPO, you'd be driving the valuation, but then working with equity capital markets, because there'd be components to a model that would involve what sort of discount would you need to price an IPO at. So you might do the fundamental valuation, but then work hand in hand with equity capital markets to think about how that fits in with an IPO. But generally, as a rule, the valuation is held within the coverage teams.
Okay.
Which is why you see a lot of people from coverage going on to do some buy-side roles, because really the fundamental sector understanding and the technical valuation work that you talk about is held with the coverage team.
Cool. So we've spoken about the technicals, but again, and we've spoken about the culture as well. But it's a team game, right? You as you said, not only within your own team, but also the other teams and how they all interlinked and intersect. So what's the structure of a typical team on a transaction from kind of analyst to MD?
So normally the relationship will be held by the MD if you're involved in the transaction. If it's a transaction where it's in the public markets, then maybe there'll be the MD from the M&A team. And then it really depends on because on many transactions you might be advising jointly with another bank. It depends on how those work streams are divvied up between the banks. But generally, as a rule, the MD is kind of going to lead the dialogue. You're going to have probably an executive director, a vice president, at least one or both, on there to kind of lead in terms of actually the day-to-day on the work streams. Have an associate, like the numbers change depending on the scale of the project and what that work stream split looks like if there's multiple banks involved. And then analysts as well. And between the analysts and associates, it's kind of like having the conversation, the waterfall structure of the managing director either will give a view on certain things that need to be done or expects it to just be run by the team. And leading the dialogue and taking insights from the work you've done in order to have that dialogue. And then the ED, VP, associates and analysts working on what needs to be done, and then generally with the associates and analysts kind of running with that under the supervision of the vice president and ED.
Amazing. It just adds colour to how people, because we hear all these roles, but what actual role do they have within a transaction? So that's really helpful. And
it varies, right? If you look at what the kind of the work streams are for a sell side, you can say I've worked on the sell side of a company, and you can do that 4 times, and there'll be definitely commonalities. But as the roles get divvied up, as your responsibilities on that team, depending on the size of it, change, you could have ended up working on different things. And so if you see a CV from someone in investment banking, and you ask them about their role on the deal, that can vary deal to deal.
Great, perfect. And just one last question on this section, on our investment banking 101 section. So now, to give advice to students who are looking to break into this career path, then is there any recommendations, like direct recommendations you could give on maybe books and resources they can use to, I guess, learn the technicals and maybe even a bit of the strategic side?
Apart from our podcast, of course.
I think it's just helpful if you look at those investment banking questions online. I think you read, there's textbooks and stuff, but I think you're really going to learn more from speaking to people. And it's challenging because of the time constraints a lot of the people that are already in the job have. Kind of trying to differentiate yourself, which is not very helpful, but trying to differentiate yourself on LinkedIn. When you reached out, there was a link between what you were doing at university and what I'd done. And if you're imagine yourself as an analyst, you're getting crushed, or an associate with a load of work to do every week, you don't wake up on Saturday and think I'm going to go through all these kind of these LinkedIn requests and spend my time having calls. You're going to try and get some sleep and then probably go to the gym or do something that you want to do before the cycle continues. So being persistent in trying to get hold of people if you don't have direct connections and hearing tangibly about what they're doing. I'm sure like YouTube, podcasts is a good way, but then try to just get breadth of understanding, because like what we're doing now, there'll be my perspective and there'll be many perspectives on what the role is, and your perspective, if you did the role and then spoke about it, would probably be slightly different. So trying to get the perspectives and work out your own outward in outside-in perspective is probably the most important thing I'd say. And then just being diligent. When we see some of the CVs of candidates that are coming in and candidates that don't end up getting it, like you mentioned earlier, right? Having a plan and not being too rigid to the plan. You might have your eyes set on a certain IB and it might not happen. You might think that was the perfect role for you. If it didn't happen, just finding some acceptance for that. It might not happen now, but it could happen later, but just focusing on what is the next thing I should focus on, really.
Such brilliant advice, and such a great way to, it's bittersweet, we'll go on to the final section of our episode, which is kind of a bit of your plans for the future, and then looking back, which kind of echoes into tips for students, which has been kind of the focus of the whole episode, inadvertently and subconsciously, which is a great thing. So before we get on to the final 3 questions that we asked every guest, I wanted to ask, what does success look like for you personally in the next 5 years? I know we just spoke about not having a direct plan, but what are some of the big goals you want to hit, or just something you're looking to achieve?
I think in general, as a continuous version of success to me is continuing to learn a lot. I kind of enjoy taking on new things, and I think pushing yourself into an area, even if you work on something that's completely new, and there's more junior people that have done it longer, not being afraid to do that. Just because you can't have covered everything, and you'll have an angle from something you've done that they don't have. So just continuing to put yourself in situations where there's a strong propensity to continue learning. I think that, and balancing what matters to you outside of work. I think if you can find work that you enjoy, then you don't look at work as a work-life balance. You look at kind of just fitting it in with everything else you enjoy, but there isn't a scale that you're trying to tip either way. You just do your best to try and fit everything in and communicate with everyone that is important to you, so that you can manage their expectations while you're keeping yourself very busy. Sure. So I think, to speak to my point around not having a rigid plan, the next 5 years I don't have a rigid plan, but being open to other interesting opportunities within the bank if things came up, evaluating them carefully, because I think the learning curve where I am right now is strong. We've got a very good culture in the team I work in, and I enjoy what I'm doing. So for the time being, keep on doing what I'm doing.
Yeah, great answer.
Yeah, well, we'll invite you back on when you become MD as well. Anyway, so, and of course now we're on, as our loyal viewers and listeners would know, we're on to our last 2 questions that we ask to every single guest, just to, I guess, give a nice, I guess, summary in a way of the episode. So now, looking back at your career journey, what are you most proud of? I know, very open-ended question, but go for it.
I'm proud of probably the people that I met and still are in contact with over the way, because as you're navigating your career, uncertainty, doubt, however you want to put it, there will continuously be points that you will face, periods in time like that, and that can be in your current role, it can be transitioning to another role, it can be around life decisions while you're still working on your current role, and those different perspectives. Oftentimes, if you're entering a career, your friends that you've grown up with might have a different career, but they'll have a perspective on certain things. The people you've worked with along the way will have perspectives, and they'll have perspectives that can be framed from the view of coming from a similar background in terms of work to you. And so having those people along the way as a kind of a sounding board both ways, when they've got things and kind of life stages or different things coming up, how to navigate and really bouncing those ideas off. And also just from where people end up, right? Not everyone ended up in IB, but you find out about so much that's going on. And if people worked in financials here and then they go on to do things, it's probably still in financials. So the people you meet along the way, probably the proudest of that, because also those people are the ones that empowered you to learn a lot. So it's who you held on to. Yeah.
Amazing answer. I'm more excited for these last 2 questions now. So, if you could give your younger self, and you can choose the age you want, we never give an age, but if you could give your younger self one piece of advice, what would it be if you were to say anything?
Probably the advice I gave today around just letting go of having a rigid plan.
Yeah.
Because I think I've been pretty good at kind of flipping disappointment and then allowing myself to move forward, but kind of being quicker to kind of draw the line and get rid of being disappointed, so that you can focus on the next thing that's controllable.
Yeah, don't dwell, basically.
Exactly.
Yeah, and that's the thing about like rejection is that Yeah, I know it's sad, and of course it's very, very disappointing in certain cases, like, you know, that one job you had in mind, that one internship, you just don't get it. But it's just the thing, like, okay, what could have went wrong? Don't be delusional. Say, oh, okay, I should have gotten this role. It's just more flipping that as soon as possible, and then moving forward on to the next one, because of course we all know how like harsh the application cycles are, especially in uni. It's getting even more and more competitive. But anyways,
and it doesn't stop there, right? When you're in the role, you can think you have a plan on a Saturday, and something very important can come up, and you're going to let someone down. You're going to feel upset yourself that you couldn't do whatever you planned to do, and it's continuously just having that capability to just find acceptance for things, so that you can just carry on.
That's a very good point. That's a brilliant. We always talk about disappointment in the case of not getting a job, but we don't talk about disappointment in your case that you disappoint someone else. That's a very, very brilliant point.
Yeah. Anyways, last question of the episode. Thanks so much, Jesse. You've given us some great responses, so much value for our viewers and listeners. But finally, then, what's the biggest takeaway you hope people take from your story?
Yeah, it's the journey doesn't have to be kind of set in stone from the beginning. As I mentioned at the start, financials wasn't what I always knew I was going to be interested in. Being open to different experiences, not necessarily recognising that before you set yourself into them, the things you're going to pick up in terms of skill set, the people you're going to meet, what that might lead on to, but kind of being open to opportunities, and then having belief in the fact that will, if you've got some idea where you want to head, give you some sort of background and skill set that can help you on that journey you're on.
Yeah. Well, that is how you end an episode, Jesse. It's been a genuine privilege to speak to you, and thank you for allowing us to come in person, because it's never the same as online. And we've spoken about a lot. We've spoken not just about you, but about how students can really get to be like yourself, get to be in a role like you are now, and deal with plans changing, deal with transition periods and inflection points in an ever-changing career in an ever-changing world, right? So I really want to thank you, and we hope you enjoyed it just as much as we did. And for our listeners and viewers, we hope you enjoyed it just as much as we did as well. And if you are watching us on YouTube and for some reason you haven't subscribed, then I'm sure Jesse has given you a brilliant reason to subscribe, because there's only more episodes just like this coming to the Smart Money Show very, very soon. And of course, the same goes for those who are listening to us on audio platforms. You can drop us a follow, and you can drop a comment on either platform if there's someone we should be speaking to that we haven't spoken to yet, or a topic that we should cover that we haven't covered on the Smart Money Show as of yet. And of course, we have just launched our brand new website. Actually, by the time this goes out, it will be a few weeks, but definitely check that out. It's basically our brand new online HQ for everything. Subscribe to our regular newsletter and check out our articles made by our very own in-house team of journalists and analysts. But as usual, we'll see you next week for yet another episode of the Smart Money Show. But until then, take care and please stay tuned. Thank you.